Anyway, hello everybody. Welcome to our Trading Week Ahead broadcast. I'm Ken Calhoun, banking over $7,000 in net profits in my trading accounts the last 2 weeks alone, trading instruments like this. This was my best day in a couple of years, as $2,000 in a single day up. And these guys, welcome to our Trading Week Ahead broadcast. As always, all information is for educational use only. I'm not making advice about what to buy, sell, hold, watch. It's agreed not to make actual trades. I only said that like 18,000 times. Anyway, we make no profitability, performance, or income claims of any kind. This is all educational use only, impersonally published for the general public, not to be construed as investment or trading advice. But still, I'm kicking Wall Street's ass, so I'm in a good mood. Now, if you are still holding on to stocks, you're a moron. And that's God's honest truth. I've been telling you guys to sell the stock market since back here on the bearish engulfing, right? The day after bearish engulfing, whatever, the Saturday after that. And I was correct about that. That was the right place to sell stocks. I was calling BS on the rally. Because the reason I called BS on the rally was from a candlestick perspective. These are what I call melted candles. I just came up with that. And I'm not a big fan of coming up with names, but flat candles like doji or uncertainty. We don't have large whole body green candles during the rally. So that told me that I was correct to be buying, which I was, inverses on the first sign of recovery. Like UVXY was buying it up over the 50 SMA, and again here, and again in the region here, and again up here. And I sold it all, and not all of it. I think I'm just like 10 or 20 shares, but I went mostly cash yesterday because this looks like an extended gap up. Now, I'm sure that this will double from here. I'm 100% confident. You know how good my calls are. I'm a rock star, if I do say so myself, but I got the P&L to prove it, baby. Anyway, this is likely to pull back and chop and drop, mean revert, pull back. Maybe next week's a consolidation quiet week, or maybe it's the mother of all bear sell-off weeks, and this guy gaps up to 42 on Monday, and I missed out on a little bit of a gap and it runs to 50. It's more likely to do a slight pullback down to 30, 32 or something like that. Chop around maybe on Tuesday. The market's going to be maybe a slight recovery day on Monday, chopping around on Tuesday, and then sell off with the renewed coronavirus death counts coming up into the tail end of next week. And we'll have a bloody Monday a week from Monday. But we're kind of overextended a bit in the world of inverse. And the fact that the S&P closed the day slightly green is insignificant big picture, but from a technical standpoint, that told me to lighten up on my inverses. Because this is a reversal market. Like last week was something, right? Monday, Tuesday, Wednesday, Thursday, alternating, 1,000 points up and 900 points down, and 1,000 points up and 600 points down, or whatever in the Dow. Very schizophrenic, undecided market. So overall, it's a bear market and will continue to drop, but it may bounce a little bit. So I wanted to take profit on my inverse instruments. How many of you, quick audience interaction, how many of you are wisely listened to me last week and profited, hopefully even more than I did, in instruments like UVXY? I've been telling you guys the last month and a half or two to build a position in this, and you could have tripled your money if you'd listened to me, right? So congratulations if you did. And shame on you if you didn't. Again, for more, be sure to learn from me in my live room at tradingtheopen.com. Day and swing traders, I got record-breaking number of new attendance because people realize the fallacy and bullshittedness of the pop and drop under $10 circuit breaker halted crappy day trading scalp, thousands of risky shares that blow up people's account approach that competitors advocate. Day trading does not mean day trading small cap under $10 stocks. That's for fools, for morons, for gamblers, for idiots, for jerks, for people who want to lose their freaking money. Sorry about that. Instead, you want to day trade things that actually have some momentum. And you can also do what I spend a lot of time teaching my traders how to do intraday swing trades. So you put on a trade early in the day, close it out into the end, or say we're looking at charts like this guy, VIPS. You put on the trade early in the day, Now, you could have done an open range breakout scalp, and that's all nice and interesting, but it's better to put on the trade early in the day, put a stop under support, and then scale out around 334. And that's the number one way to trade the markets, is intraday swings. I'm a stone cold expert at it, doing millions of dollars worth of trades over the years, and I've learned the hard way how to trade things the right way, at least in my thinking. So I think it makes a lot more sense to not try and scalp little tiny quick micro 20, 30-cent moves, because you get death of 1,000 cuts and you get shaken out more often than not, and it's extremely frustrating. An easier way to trade that mitigates risk of overnight gaps against you is to intelligently put on a trade early in the day and cash out at the end of the day. And if it doesn't work out, it doesn't work out. Let's say you bought this yesterday, it's starting to run up, and you bought it, and you take a little itty bitty stop or whatnot, big deal, right? You want to trade the right kind of charts that have good directional volatility. So intraday swing trading, especially Tuesday, Wednesday, Thursday, in general is the right way to trade. Mondays and Fridays are generally tighter range days. For your consideration, we also have this chart, TRIL. For small cap, these are the kind that I cover in my small cap scans. Now we have a shooting star up here, so we don't want to hit it long until it breaks north of 8, but in this type of a market, you want to trade things with compelling consistency. You don't want to trade pop and drop charts, which is what we see a lot of out there right now. You have a lot of indeterminate charts that are very sketchy, and they're very undecided in what they want to do. So don't trade those. Only if you're going to trade equities, particularly for swing trades, you want to trade things that have good directional volatility that are likely to continue on up. Here's another small cap. Extremely risky, but what I do when I trade instruments that I think have a shot of going up, or things that may continue on up, like DWT, right? I just start off small. Like I will be buying this on, and thanks Mira for the heads up on this on yesterday, I think it was. That's a good chart. I'll hit that. I'll trade that. That's a good minor gap continuation with a large green candle. Let's say it gaps up to 1050 or something tomorrow. I'll buy it like 1070. Let's say it gaps back down to 7, then I won't trade it. But if it gaps up a little bit or even opens up flat near 980 or 10, I'll buy 20 or 30 cents above whatever the open range breakout is. But I'm only going to trade like 30 shares. My average starting dollar allocation for swing trades is $500 or less, really small. But I made $7,000 in 2 weeks recently trading the inverse is that same exact strategy, because the number one goal as a trader is to keep your stop losses as inexpensive as possible. So you always want to play with the house's money, right? Alexa, play Pink Floyd Money. Sorry, but I love that song. Money! Show me the money, baby. What do we got going on? Now I'm going to be playing. It's not playing. Anyway, things like Gush have been really beating the heck down, right? I think that one's good for a bounce. I'm going to cover the exact strategy to use for that one with my swing scans members coming up in a few minutes. But I'm not a big fan of bottom fishing in this market because we still probably have a long ways to go to the downside. So really what you want to be doing is looking for plays and instruments that have good upside continued potential after a pullback and then a bounce. Hey Oksana, how you doing? Traded TVIX this week. It was 120 and then back down to 119. How to trade it? Very small. Hey, Steve's asking, typically how many shares do I start a trade off at? Usually, I'm being really conservative, and that answers both Oksana and Steve's question. Like TVIX, I've only been trading 5 shares at a time, because up at $200 a share, that's $1,000. And I wasn't trading it up at 200, but I was trading it on the way up. And even at 80 or 100 or whatever dollars per share, even 5 shares is $500. I bet in roughly $300 to $500 increments, and that's a right or downer. Get your Mont Blanc pen and write that down, right? Every trade you do for the rest of your life should be less than $500 of upfront capital risk. Somebody posted on a forum about, well, maybe it should be 1 or 2% of your. No, that's way too much money. That's it would depend on the size of your account, but For most of us, that's way too much money. Your upfront risk needs to be absolutely as minimal and tight as possible. You know, my day trades, when I take stops on intraday scalps, they're often for like 90% of thousands of trades, over 7,000 or 9,000 trades in the last year and a half, less than $50 stop loss cost. And most of them are down to like $15, $20, $30. The key to success in trading is take a lot of shots and make sure you've got really, you may think ridiculously tight stop losses, but after 21 years and millions of dollars traded, I know how to trade. It's all about taking a lot of shots, position sizing and scaling, as taught by Dr. Van K. Tharp, who's a nice guy, and he's really right. Buy his books and learn from Van Tharp on position sizing and scaling, and from me, and start off really small. So, you know, I made $7,000 this last 2 weeks trading. Every single trade was 100 shares or less, and most of them were down at 20, 30, 50 shares at a time. Put these little, look at it, like Lego building blocks. They're little, I don't have any Legos. I'm all grown up now, but they're like little building blocks that you're building the trade in. And the first sign of trouble, crash it down, knock it down, take the money and run. That's how you trade. Very small upfront risk, try to maximize your return and get out at the first sign of trouble. Or in this case, you got to kind of blow off top, right? To me, TVIX looks a little pricey up under 200, and everyone agreed that's why they sold it off yesterday. 200 was, again, that fits perfectly with my whole number / decade value / century value strategy. Things that are like round numbers, like 2000, or for Tesla was at 1000, right? Those are major resistance levels that people are going to take profit at or exit. I don't like the idea of exit targets. I use trailing stops, but for anyone who uses targets, 200 was a clear target. It almost doubled in just a couple of days, right? So this is absolutely far too risky for most people to trade because the range is big. So I only trade it in 5 share increments up here. I was feeding the kitty 5, 10 shares at a time, and then I sold it all yesterday. Now, maybe it drops down to 100 tomorrow, or I should say on Monday, or maybe it gaps up to 300. Either way, I've got a strategy designed to do well with it, and I'll be covering how to do that in my live trading room. A good point from Wendy saying self-discipline is important. Yeah. Make sure you've got the key to that is make sure you got your numbers set up ahead of time. Hey, Damon. Hey, Alan. Traders asking, what's a good 5G stock? Yeah, remember, Mira, that's why I mentioned that you said you play the piano. And good for you. Everyone should play the piano. Everyone should go get a key, at least go get a $100 keyboard on Amazon or Best Buy or whatever, and learn how to play some music, because timing and pattern recognition, and it's good for the heart and the soul too, is music. I've been a musician my entire life. I love music. I live for music. It's music's world and we're just living in it. And piano is a wonderful instrument because of the richness of the chords that you can create. Anyway, the point is I got to blow off top on these guys, so that's why I cashed in yesterday. What else? Let's see, Steve's asking, how long do my trading open sessions last every day? That'd be what's called a buying signal for those of you in sales. Glad you asked, Steve. I'm usually there 8:30 till 10:30. The official hours are 9 to 10:30, but I'm always there early, 100% of the time. And I stay late. I often, if something's worth following, I'll stay till 11 or 11:30. So I'm there for a minimum a couple hours a day for everybody, 5 days a week. Even though the video I shot when I was still running the room just Tuesday, Wednesday, Thursday, I've expanded the coverage because of volatility from Mondays through Fridays. And that's why we've got a record-breaking number, new subscriber count in the live room, because people realize that day trading the way these moron kids have been telling people, misleading them the last few years, is not small cap under $10 low flow bullshit stocks that get circuit breaker halts and pop and drop. And nobody can mirror the trades of the so-called guru except the guru himself. And that's because it's phony. And they use a very complicated con. They go long and they have a confederate go short at the same time, out of sight of their room members, and they hire people to be cheerleaders and claim to make money. It's an elaborate con, and the FTC and the SEC and the CFTC have all been notified. So don't waste money on people that are bullshitters, because they won't be around for much longer anyway. Investigations are underway. And I'm glad the regulatory compliance agencies are finally starting to clean up the education industry. It's about time, and I'm glad to see it because I hate to see people lose money and get bilked out of millions of dollars needlessly. Learn how to trade more accurately, potentially. Anyway, be a student of the VIX. And the VIX is our holy grail. The VIX is extremely important to understand. That's why I made so much money, because I know how to trade based off what the VIX signals are telling us. I told you guys once we break out of that 16 to 18 consolidation range, load up on the bear ETFs, and that was the exact right call. And I congratulate all of you who have been profiting from my knowledge. And I sincerely hope that you're making more money than I am. I only made 7 grand this last couple of weeks. With my experience level, it should have been a 70 or 100 grand the last couple of weeks, not a 7 grand couple of weeks. But so what's up? The VIX is likely to gap back down to 34, 32 on Monday or Tuesday, and then resume its uptrend. If the VIX breaks and holds over 50, that is a definite bear market signal. And again, Wall Street quants were all kind of red lights went on around trading floors around the world, figuratively speaking, when the VIX broke 50 yesterday. That's a key technical resistance level. It was like 25, 30, and now it's way up at 50. And it can continue to spike on up. This stock market will it's much more likely to crash and burn and go down to under. This is my official call, is that we are very likely to see the market take out and get under the previous December 24th lows from 2018. The market is in full correction mode, and we have seen nothing like this. This is like a black swan event. Somebody asked me about what are some good 5G plays. Only a complete fool would buy stocks in this stock market. I've been saying that for the last month or two, and I've been right. Do not buy stocks in this stock market, regardless of what the stupid ass talking heads are telling you. They're full of shit. They were in 2008. I kept remembering all these talking heads going, booyah, it's time to buy quality oversolds because they'll go up eventually. Or listen to Warren Buffett because, no, epic fail. And talking heads who are listening to me, you are doing a genuine disservice to the entire trading and investing community by encouraging people to hold stocks in this market. That is irresponsible, and I call you out on it like I did a month ago. You should not be looking for quality oversolds for a bounce. That is bullshit. This market is burning. I've been telling you the last month or two it was going to do so, and I was right. All right? I'm an expert. I know how to trade. I've done millions of dollars worth of trades. Anyway, so I agree with you, Andy, saying I like the drummer on a bossa nova jazz band. Yeah, high speed. So that's funny. Russell said his Alexa just started playing money too. Well, good for you. Yeah, sorry if everyone has those echoes out there, the little Alexa tower things. And uh-oh, she came back in line. That's cool. It's got the blue lights or something. Alexa, turn off. Okay, anyway. Ready to rock and roll. And for the love of God, for the love of money, I should say, the correct technical signals are what? If you do want to nibble at the market, wait for minimum. A trader asked a smart question of how do we know the bear market's over? 3 green days or more in a row above the 200 SMA. That's going to get Wall Street quants and institutional buying to start nibbling. And they're all listening. I'm so widely listened to on the street. Anyway, and for all of you who are undecided, do not buy the bounces in this current market, even if Monday's a big rally day on Wall Street. Ultimately, what happened? If you bought the rally days last week, you're fucked, right? Boom. Well, I bought because it's bouncing. Epic fail. Boom, I got epic fail. Epic fail yesterday, too. Don't buy in the down market. You're just going to get in trouble. The earliest bullish recovery sign would be 3 or more green days above that 30/60 200 SMA line. Anything less than that, we're going downtown. And if you're, for some reason, still foolishly in equities, by all means, again, this is not trading recommendations or advice, but what I would be doing if I were in an alternate universe would be selling it all if it lost 28.40, right? That's a definite sell support signal on this chart. This is the 90-day daily S&P chart. So we get under 28.40. If you're still in equities, cash them out. Go to cash, because we're in the start of an epic fail market that may well take out new lows. If we look at the 1 year, actually let's take a look at the 2 year. We're going down here. We're easily going to lose the 2650, right? These are the moving averages on a 2 year chart. And if you want better context, this is the start of a big epic drop, right? Now if we lose here and stay under here under the 2850, that's a key support level, 2850. Next is 2650. And I fully expect, I don't set targets, but I fully expect that we'll get down to 2400, 2500 in the S&P. That's easy. This is the biggest red candle in recent history. The market's going down. So let's profit from it by trading stuff that goes up when the market goes down. Just getting the party started. We got lots of room to run. For more, be sure to learn from me in my live room at tradingtheopen.com and or my swing scan service, or for the best of all worlds, just get my all access pass. It's only $19.97 at www.crushwallstreet.com. Love to see you guys join, and hopefully you can profit even more than I've been profiting, right? I sincerely hope that. Just like, parents, you want your children to do better than you. Consultants want the company to survive and thrive and implement what you've taught them to solve operational problems and improve profitability and net income. As a trader, the goal is to make bigger winning trades more often a way of life. So my job is not just to entertain, but to teach, educate, inform, and give you better than booyah tips that you can move forward as an active trader. So great to see all of you here, and I sincerely appreciate the big turnout. I've got to run. I got swing scans in a few minutes. For more, be sure to join me at tradingtheopen.com.